closing. Beat everybody. Happy Thursday. How's your day going here so far? Hope you're having a good day out there. This is a quick stock market update show that we do for our customers here at Jazz Wealth, as well as those of you that want to follow along and kind of learn about the markets and see what's going on for the day. We're financial advisors here at Jazz Wealth. We manage our own portfolios. We do things really differently here. We like to teach you along the way. We like to manage our own portfolios that are expense-free, commission-free, all that stuff. And one of the ways we teach customers, also these classes and things, but every Thursday we do a class for customers. And we talk about different topics each time. Usually the events are posted on our website. They're a little delayed right now because next week is Thanksgiving. But you can usually go to our website and see what kind of class on the deadlines that you guys have for your various accounts that you may have, whether it's 401k contributions, Roth conversions, reverse rollovers, all that great stuff. We're going to go over that tonight. So, like we always say, grab a glass of your favorite drink or wine or whatever you like. Come hang out with us. We'll be in the speakeasy later for that class. A little change of scenery for the sets there. So look forward to that. If you can't make it live, I'll reference it in the weekly email that we're starting to send out again, so you can check that out. And then, of course, the archives are always available in the dojo for you there, so be sure to join us. We're also playing a game called Guess the Dow. If you can guess the Dow, tell me where you think it's going to close, probably right in this area somewhere, given how things have moved. For next week, I'll send you a $100 gift card if you're not one of our customers, and if you are one of our customers, we'll credit you $100 to your account. Even if you've contributed the max for the year, we can actually do that and still get away with it legally. So we'll do that. Also, for those of you thinking about joining us here at Jazz, know that if you're transferring your account from somewhere else, we will even handle the breakup with your existing company or advisor for you. You don't have to do a single thing. We have zero shame when it comes to that. We will call them, we will get it transferred and handle all the crying and all that stuff. Anyways, let's talk about the stock market today, because we pulled back for the third straight day in a row. 54 lower on the Dow, 4 on the S&P, and 20 on the NASDAQ. Let's go over to the charts here, because before you get too excited about the markets pulling back, we're talking pennies here, right? This is peanuts. So those of you that are wanting the markets to pull back, we have basically, oh, there we go. We've basically fallen a whole total of 0.5% in 3 days. So it's not like you can get too excited and say, woohoo, there's a discount. I love that. The S&P down 0.5% here. Still very much in an uptrend and still very much okay if it wants to continue to pull back. Remember, markets breathe in and they breathe out. It's a living organism just like all of us. We have emotions that lead to one side and the other. Sometimes we're very scared. Sometimes we're very happy. The stock market does the same thing, and so it's totally normal if we want to take a breath out here for a little bit. Although lower volume, lower volatility, as we covered in last week's class for our customers, is to be expected, although there can be days here and there with some of the news going on there. We are now pushing 30 straight days of the stock market being stuck inside of a daily range of plus or minus 1%, meaning it has not gained more than 1% in a given day, and it has not lost more than 1% in a given day over the last 30 trading days there. So gives you an idea, sort of this holiday volatility starting to kind of creep up. If we look at the Dow, very same picture there. It's in a sort of a slight exhale, if you want to say that there. But still very much strong, sitting near highs. Tech stocks continue to weigh just a little bit on the NASDAQ. If you're following along there, Amazon pulled back a little bit today. Well, a lot of semiconductors pulled back. We'll cover all of that. But that's what you got going on the NASDAQ. The Russell was the biggest loser of the day and just kind of flatlining up here near highs. It's teasing us at the idea of breaking out. It did start to sort of outperform the overall indices for a while there, but has since gone flat, just kind of trading sideways, not too much, but still the biggest loser on the day. Economic news was fairly light today. You had existing home sales come out, and I want to share something with you if you care about this sort of thing on the screen coming up. You've got U.S. existing home sales for the year. So existing home sales trending higher, although sloppily. They were up today by 1.9%. And here's the thing. You go, well, what does that mean? Does that mean anything to me? Well, existing home sales on the upswing there, so more home sales are taking place, which means you can probably expect higher prices in homes. So if you've been waiting to buy a home or something like that, you're probably going to see higher prices. Why are you going to see higher prices? Because if I add the 30-year mortgage rate on the charts here, you can see that's been ticking lower. We've been talking about that here a little bit for you. So 30-year mortgage rate trending a little bit lower. That's helping U.S. existing home sales. And if we go into U.S. home inventory, Where do I find that at? I got to spell it right. Inventory. U.S. Home inventory. I should have prepared this chart. There it is. You still got it. Okay, so let's just normalize this out here a little bit. Okay, so we've got purple, U.S. existing home sales on the uptick there, because why? Inventory's been dropping as well along with these rates. It just basically shows you, if you zoom out a little bit, you've got lower interest rates helping people go out and buy homes. They can afford to pay higher prices for homes. It's not that big of a deal because the rates are lower, and so that's been pulling on the sort of national inventory in terms of existing homes. So there's sort of a really weird-looking chart of why U.S. home sales are ticking higher, and is why you kind of expect that to continue if it's something that you're thinking about, paying attention to, or want to participate in. So there you go. All right, sector-wise, let's play a little game here. Go over here. Okay, sector-wise, we got semiconductors. They were one of the weaker ones on the day, continuing to pull back, but that's okay. You'd like to see this sort of, breathe in, breathe out, like we've talked about. Semiconductors were one of the weaker spots today because of a downgrade on a few different names. I believe it was KLA 10 Core was the one that got the most amount of attention. KLA 10 Core down 6.96% on the day, breaking through the 50-day moving average. Applied Materials, which was just recently on the new 52-week high list, has pulled back pretty aggressively. That was included in the downgrade today by UBS, I believe was the company that came out, or the analyst that came out and sort of focused on that. And Lam Research, 3.73% to the downside. Add those up together and you got a big bulk of the SMH in terms of the stocks that participate in that category that were a little bit weaker on the day. So that's one of your weaker areas there. You got Basic Materials lower on the day as well, down just a little bit. It's been pulling back rather aggressively here since this sort of will they, won't they trade thing go on, the whole Ross-Rachel thing with U.S. and China. Huh? Who's with me on it? Somebody knows what I'm talking about. Come on. Not everybody can be as old as I am, right? So Basic Materials pulling back just a little bit there, not a big deal. Rates today did move a little bit higher. They took a break from their decline. So you got, here's the price of the 30-year bond. So as rates move, as prices move higher, rates are moving lower. And so today they took a little bit of a break. With rates moving higher, we've been talking about utilities and REITs, right? So with lower rates, that helps utilities and it helps REITs. Well, look what happened today. It's really kind of interesting here. Rates move a little bit lower, and all of a sudden, you've got REITs moving lower as well. That's not a good sign. Remember, just yesterday I was pointing out how, look at REITs stopped moving higher. Even though rates were moving lower, you're like, why'd they stop moving higher? You started seeing that weakness. You look over to utilities, you saw the same thing. They've been sort of flatlined here, and rates were moving lower, so why would that not help utilities? And we talked about the idea of, it's just kind of overdone for the year. Both these sectors have had amazing runs. Our real estate fund, by the way, just killing it. Performance, you can see it on the website. But it's kind of taken a break. And so now that rates have ticked a little bit higher, you've got no pressure to the upside, but all of a sudden rates moving higher. People are saying, okay, now I'm going to officially take some profits on the utilities and real estate and everything. So real estate really getting hit hard today. I'll use the ICF to show you. There's a handful of good ones out there. But you can see that pullback in REITs today, and all just because rates moving higher. Look at the short term. Here's the 10-year also pulling back a little bit, so a little bit of a boost really across the yield curve. If you look at the yield curve and we kind of plot all the different maturities there, they all sort of ticked higher today. They all did tick higher today, so that's that one. Okay, click the right one. Oil. What a wild ride on oil here. So apparently there was people that didn't like the price of oil moving lower. The other day it had an aggressive little sell-off, and I even said on the show here, that sort of sell-off sort of cements the top for oil in the short term. Well, not if Reuters has anything to do with it, because Reuters came out and said, we heard that the OPEC production cuts were going to continue into the summer of next year. Well, that obviously means less oil, higher prices, right? So less oil out there. Even with demand not changing, you see the price of oil moving higher. So for the last 2 days here, really strong move, and today sort of capped off by that Reuters report, and a great reversal. If you're ever in a stock, a commodity, an index, whatever, and it starts to bleed to the downside in a wide range day like we saw there back on Tuesday, if it immediately reverses itself, that's the best case scenario, right? Did a class for customers. It's in the dojo. There's 3 classes on candlesticks just to kind of kind of teach the language of what all of this means here. And so anytime you can see an immediate move to the downside, immediate move to the upside, that's where you know, okay, the other side has complete control. The bulls stepped in. They said, no, you don't. We're not pushing lower here. And so the price of oil really, really strong. I would still remain kind of suspect given how, jittery the price of oil has been. Yeah, there you go. A little bit of an overview for you. And so because of that, a lot of the oil names, your explorers, your, the service stocks, things like that, all did well. One in particular, ExxonMobil had a good day today, 2.4% to the upside. They're also selling off some of their oil fields as well, and I believe they confirmed that. So that stock got a nice bid, closing very much near the highs of the day. But other names, you could go through the list and kind of look through and see, like Chevron had a good day, ConocoPhillips had a good day, back to the 200-day moving average, all the way over to some of the equipment makers there, Schlumberger, 1.3 to the upside, Halliburton in the space as well, about 3% to the upside. So it gives you an idea some of the stocks that were playing along with the sector today, which is a good thing if you're participating in that space. Apple was in the news yesterday. President Trump and Tim Cook touring their Mac Pro facilities there. It likely just kind of a dog and pony show for China to show that, hey, look, we're about to take some more production from you guys. Nonetheless, that was in the news. And Trump said he's considering exempting Apple from tariffs and everything. So I don't know. It's where that one stands. That's why that stock was in the news there. BJ, the Wholesale Club, maybe you have some by you. I don't think we have any by us here. Stock was lower by 8% on the day. They beat on earnings by a penny, lowered their guidance. Revenues came in a little bit light. Not too good. So they lowered guidance going forward, and they sort of lowered it to the lower end of things, which normally if a company does that, it's not a reason for an 8% down day, right? It's just, okay, it's not going to be a good day. It'd be down a few percent. If everything else looks good, most people give it a bit of a pass, and they say, okay, let's see what happens. In the retail grocer space, that's a big deal. BJ's has a net profit margin of 1.6%. So anytime they're guiding towards the low end of forward expectations with such a tight profit margin, people get a little scared about that. So BJ Wholesale down on the day. The big news was really the TD Ameritrade potentially getting bought out by Schwab. I don't like it. I don't like it at all, but the stock was higher today, very much so. A 17% gain on the day. This is largely seen as a value buy for Schwab, right? TD Ameritrade has sort of been an underperformer. Well, you can see it on the charts. It's been an underperformer. So from a valuation standpoint, Schwab's basically looking at like, hey, if we buy you out, we're getting a deal. This is a discount to them. I believe there were rumors of around $26 billion for that acquisition. That would put them as a combined company with just over $5 trillion in assets. So because these, they've all switched to commission-free trades, now they have to consolidate. I think that's unfortunate. And I thought CNBC did a good job today. I happened to catch it on TV. They were talking about how free commissions are not really free. I did a video before where we explained to our customers, why is it that we don't have commissions? Like, who's making any money off of that, and why do they do that? Well, somebody's making money. It's our brokerage firm, actually. And so we kind of explain how that works. Well, CNBC kind of touched on that today to explain sort of that payment for order flow. I did a video also on YouTube. It was public, how Robinhood makes money, right? So they make money off that net interest margin and also that order flow. So don't feel bad for them. You trade for free, but you're really paying for it. And they did a good job today to explain how the customer actually is paying a commission. It's just not an actual line item commission. And that's something that Robinhood and other companies have gotten away with for a while. Not wrong. I'm not against it, but that was, I thought, well covered today, if you happen to catch it. Schwab was higher as well, about 7% on the day. Who wasn't higher was ETrade. ETrade. There we go. Come on, man. Why won't it pop up there? Why did I... Oh, come on, man. There you go. ETrade lower on the day by 9% because they got left out of the deal, right? ETrade basically got left out of the deal here. Not such a big deal for ETrade, although it was lower today. If you ever look, and I only know this because we went back, we just did this when everybody lowered their commissions to zero. TD Ameritrade, about 25% of their revenue is reliant on commissions. So that's 1/4 out the door just like that. They sort of need to merge with somebody or figure some other way out to make money. ETrade was at 16, 17%, somewhere in there. So not such a big deal to them. So now the question is, will ETrade and Interactive Brokers do something? Will they be the next targets? It's not going to be from Schwab, because that's a big deal for them. They're not just going to go sweeping, and I don't think they're going to go out there and just try to spend all their money and buy everybody. But they're buying TD Ameritrade, at least it looks like there. So we'll see going forward there. Speaking of buying, the CEO of Uber bought 250,000 shares on Monday of Uber stock at $26.75, $6.6 million spent on those shares, and so far so good. It was a good buy right there. They were trading basically $3 higher, so $3 on $250,000. He just made $750 grand by buying his own company stock at a discount. So anytime somebody tells you don't buy a stock at a discount, why not? Right? Especially if you believe in the company, as I assume the CEO of Uber does believe in the company there. Okay, Macys next on the list, a little bit lower today, 2.3%. They beat on earnings there. Revenues were weaker than expected, and they lowered their guidance going forward. This was a pretty tough one for Macys. It wasn't very good. The CEO himself used everything he could blame besides the company. I mean, they blamed weather, believe it or not. They blamed weather. They blamed the fact that they were updating their website for the holiday season, and so that took away a little bit of some of their attention. They blamed some of the lower tier malls where their stores are at. Didn't matter. They missed on sales. They fell more than expected, and the CEO even said sales fell more than they expected. That's not good, right, when you hear that. Stock was only down 2% because it was already down 11% on the week so far. And either way, if this was a good earnings season, this is one of those stocks, we kind of been talking about this week, one of those stocks that you would call maybe a tax loss harvesting type stock, right? It's one of those stocks that if you own it, you're like, okay, it's the end of the year, I'm down, 20, 30%, whatever. Maybe I'll just take the loss, put it on my taxes or whatever if I can, use it to offset some of my other gains. And so even if this stock did tick a little higher, I think you'd have seen people taking that tax loss sort of harvesting there. There's a lot of names like this. And in the energy space, same thing. So that's what you got going on there. Restoration Hardware, RH is the symbol. I think they even prefer to be called RH now. 3% higher on the day, hitting new 52-week highs there. Remember, Warren Buffett took a big position. I think he's now like the 5th largest shareholder in Restoration Hardware. There was an analyst that downgraded the stock, didn't seem to matter at all. CEO was on Mad Money on Tuesday talking about the Buffett discussion, new shares that he bought and everything. So that's that one. What else do we have for you here today? PayPal's buying a company. They're buying Honey. You ever heard of Honey? I've seen ads and stuff for them. Down 1.5% today, and that's largely because they're buying Honey. They're overpaying for it, $4 billion. So they're getting a premium. Old Honey is pretty cool. A lot of companies getting that these days. Tiffany was higher today by 2.5%. Remember, this big gap right here was from the LVMH potential takeover. So they put in an offer at $120 a share. I believe it was like $16 billion or something like that. I think it's in the scroller maybe down below. Well, anyways, they said, no, we can't do $120. Try again. What else you got? And didn't even counteroffer. They just told them to go back to work, come up with a new offer. Well, they came up with that offer today. I think it was $130 a share, so that's why that stock was higher on the day. What else do we have? The pot stocks continue higher today. We've been talking about that. The Canopy Growth got the upgrade yesterday from Bank of America, where the guy basically called the bottom. He used every word he could to tell the world this is the bottom in Canopy Growth. And so he had that out there, and there was a lot of that follow through today. Tilray did also, well, did 7% on the day, so not too bad there. And Kronos, I believe, had a great day. Yeah, 11% basically on the day as these pot stocks sort of find new attention from the bulls that had otherwise given up on this overall. So that's what you have there. We'll do a few more things here, and I'll take a few of your questions, maybe a few less questions than normal because I want to get ready for our class tonight. 63.5% of the S&P 500 is above the 50-day moving average. That's on the low end, actually, so we've been sort of backing off Stocks sort of fading away there little by little. We talked about some of the underlying mess or deterioration in the markets that's been going on this week, but really not that big of a deal so far. There were only 12 new 52-week highs today. That's also on the low end, but there's still some good stuff in there. You had Schwab, of course, on their merger and things going on there. You had Copart hitting new 52-week highs. Very, very strong stock, and now up just under 80% on the year, so a good mover there in that space. You had Garmin also hitting new 52-week highs. These guys never seem to get much attention media-wise. It's up 12% just this month, by the way. So Garmin doing well there. And Target hit just a touch higher. You see how there wasn't as much enthusiasm as yesterday? Everybody that wanted to buy the stock seemed to do that yesterday. Today, the volume was like 1/4 of what it was yet. Well, you can see it down there. 1/4 of what it was yesterday. And so not a lot of action today. People just kind of like, I don't want to pay that much. Maybe you could pull back for me. So those are probably some of the emotional people that missed out on the trade yesterday. And so those are just some of your new 52-week highs. You had 4 new 52-week lows, basically all the same names, and Cabot Oil really starting to roll over there, breaking down below this most recent low. Starting to pull away from moving averages there, really, really weak in the short term. Maybe some other stock news. AMD pulled back as well. Remember, semiconductors were weak today on those downgrades. So that stock was down 3.5% today. A lot of analysts were out there saying the stock went too far too fast. Some of the quotes were, share gains will start to get harder from here because the stock has moved too far. Barron said this stock is no longer a buy because it got ahead of itself too fast. So all that stuff that I point out where stocks that go too far too fast are not the kind of stocks you want to get excited about chasing. And Northland Capital says that although the stock will likely melt up this year, they expect to see some profit taking in the first part of next year. So they downgraded the stock as well. It was a good day for a downgrade. It makes it look good when there were some other stocks got downgraded as well. So good for them. What do we got? Tomorrow, we've got earnings wrapping up here with Buckle. BKE is the symbol. Foot Locker will report earnings as well. And Smuckers, SJM is the ticker symbol, reporting tomorrow, all before the open. No after-hours earnings on a Friday. Dividends coming out. Just CDW paying out 38 cents, so that's good news. And then one last thing you've got today is the day where ServiceNow, ticker symbol NOW, takes over for Celgene in the S&P 500. And there's another name that takes over for Celgene in the S&P 100. I can't remember what the name of it is. Was it TMO? Let me see. Oh, I'm going to bet it was Thermo Fisher. Yep. So Thermo Fisher takes over for Celgene in the S&P 100. So there you have it. Yay, we did it. All right, I'll see if I can answer just a few of your questions. And if you don't mind, I'll head out a little early to get ready for our class tonight. We'll see what we can do here. He's talking about... You've been doing lots of stats play. It's kind of hard to research the number you need, not really posted to have to dig and do it yourself. You've been doing lots of stats. Well, so you probably noticed the same thing. There's a lot of little small potential things there in terms of rewards. Very, very small. So we haven't done a whole lot of them. I've got a whole lot of them. They're just, average gains or losses of 0.5, 0.6%. They're just not all that interesting right now. If it's something you're going to continue with, you might want to consider buying the data, maybe writing a few scripts if you can, or getting someone to do it for you. It makes it a little easier, saves you a lot of time. You like the Home Depot dip? Yeah, I don't blame you. Great dip, a higher volatility here. Great one if you're looking to start a position, if you like selling puts, things like that, and you believe in Home Depot, you just want to start the position lower. Seems like it's sort of targeting that 200-day moving average, but we'll see what happens. If the markets really pull back, I think then you'd get that sort of flush to the downside that a lot of people are hoping for. But if you love it there, you'll love it at the 200-day then, right? Getting ready for that pullback, 5 to 10%. I like it. It may be quiet the rest of the year. We'll see. It's tough to tell with the holidays, especially next week. It'll be probably quiet too, unless there's some Trump news or something. What's your favorite jazz album? You're filling out my record collection. I need more jazz. I figured you'd be a good person to talk. There's actually 2 of them on this wall right here. Maybe I'll turn this tomorrow. I've got 2 of them framed. The Louis Armstrong In Memoriam is my favorite. if that helps. I've actually got it mounted on the wall. But we got a whole bunch of them here. If you ever happen to stop by, they're all over the shelves and everything. Little Ella Fitzgerald, Coltrane. Yeah, there you go. Count Basie up on the wall. Hope that helps. You like a pull? Oh, you like the idea of, excuse me, a pullback helping the price of silver, I think is what you're saying there. There you go. Got a silver player in the house. When's the next option class? Yeah, we got to expand on that. I've got a lot of questions from customers on that one. I see that was a pretty popular class from some of the stats that I've gotten there. Yep. Who sells that type? Oh, data, like market data. You could buy it directly from the exchanges, rather pricey. You could use like Xignite. I think that's how you say it. A lot of people use that. I know we use them for that. You could go directly to the exchanges. IEX has free data. I don't know if it's free anymore, but they have some free data where you can plug in directly to their API and pull the data if you like, if you're that geeky. Cool. Would you ever consider creating a hedge fund? Actually, last year I had asked our compliance if I could create our own portfolio that was really only geared towards people that were doing that sort of thing, and it got shut down. Yes, it got shut down. Yeah. But other than that, yes, I would love to, like a private one. And I think it'd be cool to do like a YouTube channel where you were just showing all of that, you know, and it was just like friends and family type money, and then just show it. I think that'd be awesome. I like that idea. Yeah, you're right. ETrade's probably going to be in the mix in terms of some kind of consolidation. I mean, I don't know what other choices they have, you know, unless they start charging for platforms and things like that. I don't know. TD Bank is a different entity. So TD Ameritrade is not TD Bank. Common misconception there. Yep. What's the difference between cash management and checking account? I just name is what people call it. Cash management from some of the other guys out there is more about the money that's in your brokerage account being used as savings at the same time. So if you're going to leave some cash on the sidelines, we do the same thing. If people have larger balances here and they say, look, I just don't want to invest it right now, we have the same thing. It's high interest sort of money market type funds where you're not taking any risk to do that. So I believe that's what they call it. Checking accounts are what they sound like, just high interest checking accounts. Yeah. Okay, I think I've covered it all. I appreciate you coming by, and it's actually the same amount of time we normally take. So got a good show in there today. I appreciate all of you helping us out, following along, hitting the thumbs up button, subscribe button, all that great stuff. We had a record number of people hit the subscribe button, so I'm going to say that's you guys watching the show, and you've been helping us out. I appreciate that very much so. And so enjoy the rest of your day. We'll see you later. If you're one of our customers, come on by the class tonight, grab a drink with us. I'll join you, and we'll see you later. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.